All right, family, welcome back to the channel. It's your boy DeFi Ryan. And as you guys all may have heard, UST has depegged off the dollar. So now UST is not a stable token. And it looks like Terra, because of that, has crashed about 99%. And I'm seeing a lot of things online about people saying Terra is the new meme token. And if we take a look here, this thing has bottomed out and flatlined. And some people have bought the total bottom and have made a couple 100%. But the price is still down, guys. And there has been a lot of talks around the crypto communities to see if this token would come back. And I'm asking you guys, are you guys actually buying some just in case this thing actually returns back to its original levels? Now, before this thing had crashed, this thing has actually had a massive run since like 2021. So was it too much of a run where it could not sustain all the promises like the 20% APR or APY returns for staking? A lot of people have said that this was unsustainable and that's why it crashed. But this is the kind of stuff that happens during a crypto bear market. So I'm going to go over a quick article as to what happened and what actually is going to happen going forward. What the community is trying to do to bring back this token. Will there be a V2 or a hard fork to resolve the issues? But nothing's going to change the fact that billions have been lost because of this. So let's take a quick look at the article and see what they have to say. So here it is, guys. Terra Luna's crypto crash, how UST broke, and what's next. What's happening? The cryptocurrency market is in turmoil, exacerbated by the collapse of Luna and the UST stablecoin, both tied to the Terra blockchain. Why does this matter? Over 15 billion in crypto value has been wiped out, and the collapse has raised questions about stablecoins in general. The crash has caught the eye of politicians and regulators, which is unfortunate because this will definitely bring regulation if people keep losing money like that. What's next? Terraform Labs CEO KWON has a plan to revive Luna, which would involve forking the Terra blockchain. The cryptocurrency market isn't a safe place right now. Look in any direction and you'll see red. Bitcoin and Ether are at their lowest point since 2020, and altcoins like Dogecoin and Cardano are faring even worse. While it is painful for crypto investors, this dive isn't unprecedented. Cryptocurrencies are infamous for their volatility, and tempestuous economic conditions are bringing down not just crypto but the stock market too. What is unprecedented, however, is the collapse of the Luna cryptocurrency and its associated Terra USD stablecoin, aka UST. You may not have heard of UST before or known that it was a stablecoin, but it is a big deal. Billions of dollars in crypto wealth have vaporized, sending shockwaves throughout the whole market. There are two intertwined stories here, that of the UST stablecoin and that of Luna, both of which are part of the Terra blockchain. The UST coin is designed to retain a value of $1 at all times, but it was depegged last Monday on May 9th, and has since fallen just to 13 cents. Then there's Luna, the centerpiece of Terra's ecosystem. Its value has collapsed in one of the most stunning crypto crashes ever recorded. And that's about 99%, guys. This thing just fell off a cliff. So the coin's price fell from 116 in April to a fraction of a penny at the time of the writing. Such an implosion has been seen in small cap meme coins in the past, but never for something the size of Luna, which had a market cap of over 40 billion just last month. This is historic for crypto markets, said Mike Burrows, co-founder of crypto investments firm Fortis Digital. This is a defining moment for the crypto space due to the size and impact in terms of the amount of people that lost substantial value. What is a stable coin? Short and sweet, a stable coin is pegged to $1, and basically anytime you trade out of it, you get dollars back. Stable coins are integral parts of DeFi, or decentralized finance, designed to be ways for investors to hedge against volatility of the cryptocurrency market. Trader could exchange 1 Ether for 2,000 USDC. If tomorrow Ether drops 50%, those 2,000 USDC tokens would still be $2,000. Stablecoins also provide a means for cryptocurrency loaning and borrowing, making them foundational technology of DeFi. So the issue with Terra is that it's not backed by US dollars. And the idea was through a couple of clever mechanisms, plus $1 billion in Bitcoin reserves, the UST's dollar peg was maintained without having to even back it by the dollar. So Terra, Luna, and UST, what are they? Terra is a blockchain just like Ethereum and Bitcoin. While Ethereum's blockchain natively produces Ether tokens, Terra natively produces Luna. Before the DPEG, Luna was trading at around $85. To create UST, you need to burn Luna. So for instance, last week you could trade 1 Luna for 85 UST since Luna was worth 85, but the Luna would be destroyed and burned in the process. This deflationary protocol was meant to ensure Luna's long-term growth. As more people buy into UST, more Luna would be burned, making the remaining supply more valuable. So here was the part that kind of made this unsustainable. To entice traders to burn Luna to create UST, creators offered an insane 19.5 yield on staking, which is essentially crypto terminology for earning 19.5 interest on a loan through what they called the Anchor protocol. Instead of parking your savings at a bank for a 0.06 interest rate, the pitch is to turn your money into UST where it can earn potentially 20%. Before the depegging, over 70% of UST's circulating supply, around 14 billion, was deposited in this scheme. So here was the key for UST to retain its peg. 1 UST can always be exchanged for $1 worth of Luna. So if UST slips to 99 cents, traders could profit by buying a huge amount of UST and exchanging it for Luna, profiting 1 cent per token. The effect works both ways. People buying UST drives the price up, and UST being burned during the exchange also deflates the Luna supply. Then there's the reserves. Terraform Labs founder and CEO KWON created the Luna Foundation Guard, a consortium whose job is to protect the peg. The LFG had about $2.3 billion in Bitcoin reserves with plan to expand to $10 billion worth of Bitcoin and other crypto assets. If UST dipped below $1, Bitcoin reserves would just be sold and UST would be bought with the proceeds. If UST goes above $1, creators would just sell UST until it goes back to $1, with the profit being used to buy more Bitcoin and pad out the reserves. It all makes sense until it doesn't. It's been a rough week for Terra developers since UST was depegged. After some, including Binance CEO Changpeng Zhao, questioned how the project's Bitcoin reserves were used. The Luna Foundation Guard on Monday tweeted that its Bitcoin reserves fell from 80,000 to just 303. The remaining reserves will be used to compensate remaining users of UST, smallest holders first. Meanwhile, KWON, the Terraform Labs CEO, has a controversial plan to revive Luna. And this is what people that are buying Luna now are hoping will bring this token back so they can, profit off of the revival. So even the CEO of Binance doesn't think that this revival is going to work. So do your due diligence if you're buying the dip on Luna. It doesn't hurt to, throw a little bit there if you want just to see what happens. But personal opinion, not financial advice. This won't work. Forking does not give the new fork any value. That is wishful thinking. One cannot void all transactions after an old snapshot, both on-chain and off-chain exchanges. Where is all the BTC that was supposed to be used as reserves? So basically, here's the resolution to the Terra Luna crash. On Monday, KWON proposed a plan to fork the Terra blockchain. In essence, this means the creation of a new blockchain that is modeled on the previous one, with some key changes. The new blockchain will be created alongside 1 billion Luna tokens, which would be distributed among current Luna and UST holders, as well as fund the development of new Terra apps. Perhaps conceding the foundational problem of tethering Luna to UST, KWON proposed removing UST, previously the main selling point of the blockchain, from the Terra ecosystem. Terra's app ecosystem contains hundreds of developers working on everything DeFi to fungible tokens, labor markets, state-of-the-art infrastructure, and community experience. He said proposing this should be preserved at the expense of Terra USD. Many, including Zhao, are skeptical that this plan will work. So guys, the CEO of Binance is really skeptical of this working, and he's pretty successful as he does run Binance. So let's see what happens. Let me know if you guys are buying Terra Luna at these prices. And like I said, it probably wouldn't hurt to take a chance a little bit, as the reward, as the risk to reward is probably more on the reward side. There is a lot of risk, but there is a big reward at the end of it. So guys, let me know what you think. Whose side are you on? Are you on Binance's side, or are you on KWON's side? Do you think he's gonna bring this thing back from the dead? So if you like what you see, leave a comment, like and subscribe, and I'll see you guys on the next one. Peace.